In this presentation, we'll talk about gathering client data for your comprehensive financial plan. Last week, you explored CFP Board Domain 1, establishing and defining the client-planner relationship. That step was necessary in order for you to qualify the client, to understand if and how you could be of service, and also to define the scope of your financial planning work. In this lesson, you'll explore Domain 2, gathering information necessary to fulfill the engagement. By the end of this lesson, you should be able to describe the qualitative and quantitative data that you'll need to gather in order to fulfill your engagement, and also to understand important sources of client data. There are two standards, financial planning practice standards from the CFP Board Standard for Professional Conduct, which apply to this domain. The first, 200-1, is determining a client's personal and financial goals, needs, and priorities. The practice standards specifically state the financial planning practitioner and the client shall mutually define the client's personal and financial goals, needs, and priorities that are relevant to the scope of the engagement before any recommendation is made and/or implemented. The table, or I should say the George Kinder inspired table on this image, is used by RTD Financial Advisors. I think it's an interesting table, and it certainly shows us how a table or a checklist provides the advisor, you, with a valuable planning tool. Take a look at this table for a moment. You'll see that the goals that the client have identified are listed in that left-hand column. And then across the different columns, you notice the different time horizons: short-term goals, intermediate goals, long-term goals. This type of tool could be very useful to you as you start to understand the client's prioritized goals and the timelines of those goals. And I think you can also see how this table could promote some interesting discussion with your client. Collecting the qualitative data, in other words, those values, attitudes, the person's knowledge about the financial markets, their experience with investing, for example, their risk tolerances, their risk exposures, their constraints, their preferences, all that inside stuff is something we attempt to collect first. Because without it, our planning recommendations will likely not be implemented or followed through. Our recommendations need to be aligned with our client goals, attitudes, values. And that's why it's so important. That's why collecting the qualitative information typically is the first step. How do we get that? Well, a lot of that qualitative information is derived via face-to-face conversations. Now, some planners may lead that conversation with a questionnaire, starting to get the client thinking about some different areas, some different questions, and then following through in those conversations. Think back to your Business 501 course, your Introduction to Financial Planning course, where you discuss these issues. Remember, in understanding your client's internal issues, it's more than just what they say. It's the stories that the clients tell. It's the body language. It's the verbal tone, the energy behind what is being said that gives you so much information. It's also from actions taken or not taken. For example, in working with your client and you give that client 8 action steps and 5 are implemented and 1 is not, the action not taken gives you some valuable feedback as to maybe a disconnect there. Besides the questionnaires, you may be using a risk tolerance survey, which is an important paperwork that you'll need to document. But I think, again, it's a starting point in helping you in that conversation to really understand what's going on. Financial planning Practice Standard 200-2. Obtaining the quantitative information and documents. The financial planning practitioner shall obtain sufficient quantitative information and documents about a client relative to the scope of the engagement before any recommendation is made and or implemented. The focus of this presentation, at least the remaining, will focus on the quantitative information. Where do we find that? What are some of the typical sources? If you're engaged in a comprehensive planning activity, you'll be required to collect data for each piece of the financial planning puzzle. You'll need to collect that data for cash and debt management, income tax planning, risk management, planning for education, investment planning, retirement planning, estate planning. The sources of this information, which we'll go over in this presentation, include ongoing discussions with your clients, questionnaires, collecting documents, collecting policies, collecting those account statements, maybe the client spreadsheets that they can provide you, and in many cases, your own research will supplement that. Let's start first with collecting data to construct your client's statement of income and expenses. Your client may or may not have a variety of income sources. A data collection table, similar to the one you see here from Naviplan, reminds you of the different categories. And having that table, that checklist, is quite useful. If you take a look at this software extended fact finder, you see that the different items listed here is salary, bonuses, taxable benefits. For the self-employed, their net self-employed earnings, commissions, professional fees, tax-free income, royalties, alimony payments. And you're looking at the different amounts. Now, if your client is retired, then Social Security will also be in that list. You'll need to document the current Social Security benefits. You might be projecting in those annual cost of living increases. If your client is nearing retirement and you're starting to create some of your projections into your planning, you may have to project those future benefits. Now note, the Social Security no longer sends out paper statements like they used to for budgeting regions, but you can go online or the client can send in a request for a paper copy. But that information is available to you. Similar to itemizing the income sources, you need to do the same for expenses. Now here's another sample checklist or table, and this one I just found online, and you too can go online, Google data questionnaire or something along that line .pdf, and you'll start to get a lot of the planning questionnaires, and you'll see a lot of similarity, the data gathering table. But one useful thing about this is notice all the different line items. So we're looking at what are those expenses for those fixed expenses, the mortgage payments, the auto payments, the insurance premiums. What are some of those variable or fixed variable expenses, like the taxes and some of the ongoing contributions in categories like that. Think back again to your Introduction to Financial Planning course when you created these statements, right? Moving forward, you get into the areas of utilities. Now, clients may provide you with a spreadsheet. Maybe they're keeping track of their expenses in Quicken. More often, that's not the case. You'll be actually reaching out for those statements that you can line up and fill in the details here. But if you do get a client spreadsheet, of course you want to verify that against the actual billing statements, and also a very valuable source in putting together the financial statements and understanding your client's situation, the tax returns. Here's an image of how you would be entering the cash flow data into financial planning software. This happens to be, as you can see, Naviplan, but most of the other financial planning software applications, MoneyGuide Pro, MoneyTree, and I can go on, work the same way. They're really driven, goal driven, but you can see you're putting in the details. Look at the salary, the amount there. You'll be clicking on that detail button, and there's even more items that you fill in. Look at the expenses, the different line items there, how much per month. The mortgage, you would actually be inputting the details of the mortgage into the software, and it would automatically generate the ongoing monthly payment. So you see that the software itself really drives you to collect the details. And that's what you want to do. You really want to go beyond the numbers. You want to understand what's driving those numbers so that you can start moving all those pieces in combination and make your planning recommendations. So now that you've collected the details of the income, you started to think about the projection of those incomes, and you collected the details of the expenses, you might start to construct a statement of net worth, the assets and the liabilities. So let's look first at collecting the assets. Well, moving down that left-hand side of the ledger, assets from the most liquid to the most illiquid, we're looking at that money markets, we're looking at the cash equivalent category. So we're looking at bank accounts, certificates of deposits, the cash value of permanent life insurance policies, if they have some there, and then moving into that next category of investments, we're looking at mutual funds, brokerage accounts, and that sort of thing. So what is the type of information you'll be collecting? Well, you'll look at the bank account statements, because the statements will provide you with the account description, the current value. You want to find out, is there any systematic additions to those accounts? Are there systematic withdrawals? And if there's any type of portfolio summary. So you want to be able to understand, what are the accounts, who are they titled for, what's in there. Certificates of deposit. You want to find out what's the current value, what is the maturity date, and possibly what sort of penalty if you're taking that CD out before its full maturity. That type of behind the number information. Mutual funds or brokerage accounts, as you can see, same sort of information, the account description, the current value, what's going on with the additions and withdrawals, what's the portfolio summary look like, what are those asset allocations, the number of shares owned. Because that's important, because of course you in your work may find that some of these are positioned incorrectly for the client's time horizons or risk tolerances, their needs, preferences, constraints, maybe even tax situations. And also in this case, beneficiaries. So that was the taxable financial assets. Let's look now at the tax deferred. So when we're doing this, we're looking at either mostly retirement type assets, annuities, retirement, qualified retirement plans, and also non-qualified plans that this would be another form of tax deferred asset. The annuity contract, well, the description, you want to find out what is that about, who is the owner, who's the annuitant, what are the income options or the guaranteed benefits, the time of that, who's the beneficiary, what is the basis that's been contributed to that, and any other withdrawal information. IRAs and employer plan statements. Again, similar information there. You want a description, what's the value, is there any vesting, is it fully vested, are there some non-vested assets that you need to understand? What is the projected employer contributions? What do you think the employee additions will be going forward? Is there currently withdrawals being taken? Do you project those soon? Portfolio summary, again, asset allocation. Who are the beneficiaries? Stock options. Description of the option. Who's the owner? What type of option is it? What's the grant date? The number of options, the strike price, exercise price, are they vested, what's the fair market value, all those sort of issues. Now, where do we find this information? Well, as we said with the bank statements, you're going back to the statements. Here you'll be going to some of the HR departments, the IRA custodian, possibly the plan custodian, and if you can get your hand on the contract to really see the details, that sort of information really helps you fill in the gaps. Let's go back again to the software, because I think it's useful to see the type of information and the detail that you need to be putting in. So do you see how that detail that you've already collected about those taxable and tax-deferred assets flow into the software itself? And if you're using this, and there's a very good chance that you'll be using some type of financial planning software out in the field, this again is a good prompt for you when you're going through and you're collecting that asset information, that you're collecting everything that you do need. So what are some of the other client assets as you move down that left side of the statement of net worth? Well, you get into the area of business assets, real property, and personal property. In business, we're looking at what type of business, what was the purchase date, what's the amount, of that purchase, what's the basis, the fair market value, titling, what type of net income, are there buy-sell agreements in place, the information that you looked at in some of your prior classes, right? What are the data sources? Of course, discussions with your client, but you want to see documents, you want to see the tax returns, because the tax returns are always a wealth of information about this. If there's buy-sells, you want to see that agreement. You want to see what is the agreed upon selling price, and you can continue to think about other issues that you would need to collect there. If the client, is inclined to add a retirement plan, obviously there's a lot of information you need to collect about that. Real estate, and generally we're looking at the primary residence, but it could be a vacation home, it could be income properties. So what's the description, the ownership data, the purchase date and the amount, the basis, the fair market value now, how much equity do they have in the real estate, how is it titled, if it's an income property, what is that net rental income, what's the monthly cash flows off of that, what is the remaining mortgages, and well, we'll look at that in just a moment, but it's that net cash flow that you're focused on. What are the data sources? Again, documents about the real estate with titles, your client research records, and sometimes your own research. You can go into some of the online sites and project the value of that home if the client doesn't have a clue as to the fair market value. You may have professionals in the area of real estate who you refer or work with, and that person might be able to give you some information about fair market value. But real estate is public, is documented in public records. You can make use of those. Personal. So where do we go here? Well, what personal item are we talking about? Car, furniture, jewelry, collectibles such as art. So who's the owner of that? What's the purchase date? What was the price? What's the current value? What is the appraised value? What are data sources? Bills of sale for personal items, sales receipts. If there's a rider on some of the personal items, there might be appraisals linked to that. Kelley Blue Book for the automobile. Again, research, bringing in other professionals. So as you can see, you've gone down, you've identified all those items, you're filling in all the details so that you understand the assets of your client. Now, as we move to the right side of the ledger, we're looking at the liabilities. And we start from the top of that, and you know that is the shortest duration, the quickest maturity, right? And so we're looking at credit cards in that case, and then we move into the longer term liabilities, school loans, auto loans, notes that might be payable, home mortgages, home equity loans. And when we get into all these type of loans, we need to find out what it is, for a revolving debt, credit cards, or for example, you look at what is the interest rate being charged, what's the total credit line, And what is the current balance? And obviously that's the available remaining credit. Total interest payments to date, so what's going out, how much is the monthly payments being made, what is the minimum payment required for that credit card. When we get into installment loans, where there are terms, and that's what we're looking at with school, auto, notes payable, and mortgages, you need to understand what is the loan, what is the collateral for that, so what is that loan for, what was the original terms of the loan, when was it taken out, what was the cost of that loan, how many periods, how much gets paid periodically, and typically that means monthly. So you're looking at current balances, the duration, the origination date, the amount, the interest rate. Get into the payments, how much is going out every month. A valuable source of information is Form 1040. And I recommend that you request from the client at least the last 3 years. And if the client doesn't have that, certainly their income tax professional has it. The client can request Form 1040 with schedules, and we'll take a look at that in a moment. You study this in your tax course, and you certainly know your way around this, but this is a valuable data mining resource. It provides you with a flow of information over time, and that's why I think you want to look at 3 of these, so you can see not only the financial condition at a point in time, let's just say December of last year, but you can also, when you line up 3 in a row, you start to see the trends. Were those incomes inflated because of a one-time capital gain? Were the expenses inflated because there was some tax liability? Perhaps that was a one-time situation or some other issue. And so this is very, very valuable when you go through this. W-2s, this client may or may not provide you with their W-2, but this is a good resource to see what the client's salary and their FICA withholdings were for the year. Schedule A, itemized deduction. The schedules, I think, really help you go behind the numbers you see on 1040. And when you get into Schedule A, which is the itemized deductions, and they're listed there 1 through 8, you can start to focus in on a given area to start to see if there might be issues you need to examine. So if there's medical and dental expenses, there were a lot of out-of-pockets there, you can zoom in on that and see what exactly was the issue. What is the insurance coverages there? What are the projections going forward? Was there something that happened one time, or is that moving forward? Is that going to be repetitive? And you get the idea as you move down through this list. Looking at the itemized deductions, comparing that with the expenses that you collected, you can start to mesh everything up. Maybe you'll see a missing piece. You see something here that wasn't collected, and that's a check and balance for you. Schedule B, interest and dividends. This is a good starting point for identifying the client's assets. Now, we already talked about building that the asset side. But when you go here and you start to see interest, you may then say, well, listen, I didn't collect anything about this account. Perhaps you didn't get that statement. The client might have forgotten to give that to you, or just overlooked that. And so again, checks and balances. It shows up here. You need to be asking for it. You need to know that it's there. If there's a Schedule C, well, first of all, Schedule C is used by self-employed individuals, independent contractors, and sole proprietors. And this is for profit or loss from a business. You see a Schedule C, you know you have to have these discussions about the data you needed to fill out the business assets. Schedule D, capital gains and losses. I think that this schedule, in combination with Schedule B, which was right there, right? Interest and dividends, is a useful way for you to understand the client's financial assets. Again, it checks and balances. You start seeing capital gains and losses here. You don't have a matching asset that you started to build in their statement of net worth. You know what to do from there. Schedule A, supplemental income and losses. Now this is where income from rental, real estate properties, royalties, partnerships, trust, and S corporations get reported. So you see something here again. It's that check and balance to make sure you're accounting for all the different assets. So again, Form 1040 with the schedules is a very, very valuable source of information. You have to be collecting that. You want to be going through that. You want to be matching that up with the other statements that you've been collecting. Other forms and schedules, Schedule K1, partnership share of income, trust or S corporations. Form 1099, reports, dividends, interest, and capital gains, independent contractor income, and distributions from qualified retirement and IRS plans. That last one, when distributions from qualified retirement and IRS plans, you certainly know that most of the distributions from qualified retirement plan or distributions from qualified retirement plans are going to have tax implications. I should say IRA plans, not IRS plans. They're qualified retirement and IRA plans. IRA, if it's not a Roth, it's going to have implications if it's taken out early, before age 59 and a half, or meeting some of the other requirements, 55, or policemen and firemen at age 50. And you'll look at the details of that. Think back to your retirement class. There's going to be the possibility of early withdrawal penalties on top of that. So you take a look at this. You'll see obviously an important piece of information there, again, to help you fill in all those pieces and understanding your client's current financial situation, and as you start thinking, projecting forward, your client's economic situation. So now that you've created the financial statements, what's some of the other data you're going to need? Well, clearly insurance policies. That's important because insurance is that foundation. It's that ensuring catastrophic risks, otherwise everything else can collapse, right? Employee benefit data, the details of the employee benefit plan. Contracts, titling, and estate documents. Let's start with insurance policies. And let's quickly review the 4 parts of the insurance policy. And I'll show you how that's going to flow into my ensuing conversation. First one's the declarations page. The declarations page names the insured, the amounts of coverage, the duration of the coverage. The second section, definitions, who's insured, the insured locations, the details of when the insurance policy applies. 3, the insuring agreements, what's covered, what's excluded, what are the conditions of coverage. And 4, miscellaneous provisions, such as policy continuation rights and really important issues there, endorsements and riders. This should look very familiar from your risk management and insurance course. And the reason I brought it up again is because when you're collecting data, quite often you won't get the entire policy. But sometimes that declaration page will have most of the information, or maybe even all of the information you need to start figuring out where the client is. Now, here's a sample declarations page for P&C. And you can see, number 1, the name of the insured, 2, the insurance company, 3, the policy number, 4, the premium being paid, 5, the who's the mortgagee in this case. 6, you can look at the coverage limits. The dwelling has 100,000, other structures at 10,000, personal property at 50. That's pretty standard, right? And loss of use, actual loss sustained. So that helps you understand the amount of coverage, right? 7, we'll look at the deductibles. 8, coverage limits, and 9, endorsements. So when I'm looking at the home owner's policy need, this declaration page does a pretty good job of letting me know if the client is in pretty good shape or if we need to upgrade their coverage. Similarly, the umbrella policy, the liability umbrella policy, is going to give me a lot of information. As you can see on this sample, I see the amount of coverage, in this case $3 million, and I also see the underlying requirement that's being fulfilled there. And you can see some other forms of endorsements, but I see here they have a $3 million umbrella. let's see, the renewal certificate is quite similar to the declarations page. And again, there's probably sufficient data for your inquiry. And here is a follow-up to that homeowners. And you can see here as you go through that, one, I'm looking at the coverages for the dwelling, the personal property, the loss of use. I'm looking at the liability coverage. I'm looking at the annual premium. And I'm seeing that last item down there. I think that's the rider items. So in this case, this renewal certificate, again, gives me enough information. I don't have to have that full policy. So up to here, we're looking at most of the P&C. I can get the declaration page or possibly even the renewal to give me what I need. But that's not the case with life policies, because in the annual premium invoice for a life policy, I'm only getting the policy number, the premium date, the billing period, the amount due. And you need a lot more than that. So when you're working with your client and you need to get the information on the life insurance policies, you're going to need to take a look at those. And if the client can't produce those contracts, then in fact, you're going to have the client work with their agency. You can get that information. So you can clearly understand what type of policy it is, what is the cash value to this point, who are the beneficiaries. That information you have to have. Employee benefits play a huge picture in the risk management picture, because health benefits are such an important part of it, and also such an important part in retirement benefits. And in some case, life insurance. There may be some group policies. You need to understand the details there. So how are you going to get this? Well, most likely your client's not going to be able to deliver to you the entire employee benefit package. So a great place to start is the client's human resource site, their website. And here's an image from Cal Lutheran. So you can click on this and you can see a lot of the details there. But another really valuable way would have your client contact their HR rep so that they can allow you to talk to that person, if nothing else. So again, it's that combination between you, your client, the transparency offered on the website, and maybe one-on-one consultations with the HR rep. This information is really valuable. So we just talked about insurance contracts, but you really can't assess the risk management condition without looking at the individually owned policies and the benefits, the health benefits, the life benefits, the disability benefits, workman's comp, all those issues that are offered through the employee benefit package. So this is a must. What else? Well, you're going to be collecting estate planning documents. You're going to be looking at contracts and titles to real property. So what are some of those? The will, the powers of attorney, the advanced medical directives or the living will, the letter of last instructions, trust documents, legal documents such as prenups, divorce settlements, payment on death accounts, and transfer on death accounts, right? Because there's a beneficiary there. Other contracts, in looking at the beneficiary designations and business documents, including the buy-sell agreement. In this lesson, you learned about revisited qualitative and quantitative data that you need to collect in order to create your comprehensive plan. These items you learned in your core financial planning courses. We're coming back and now we're applying it in a comprehensive case study. But also in this lesson, we started looking at some of the specific sources where you'll reach out to start to get that information so you can fully understand the client situation. In the next video, we'll look at how do we deal with missing data and client resistance.